To be qualified as a real estate professional, you have to work at least 750 hours in the real estate investment. Hello, welcome to my channel. Did you know the biggest expense for all of us while working is paying income taxes? On the other hand, you can save on your income taxes when you provide great housing for others. I will share with you my own experience on how much I pay for taxes on the 100,000 cash flow income from rental properties versus what I would pay when I was on the W-2 income. If this is your first time visiting my channel, please subscribe and turn on notification bell. This channel is about investing in cash flow properties, achieve your financial independence, and making an impact. My name is Korianne and I am a real estate investor since 2001. I achieved my financial independence when I was 35 years old after consistently investing in cash flow property over 8 years. The information that I'm going to share is for the learning purposes only. You should consult with your CPA and accounting thoroughly and confirm if you are qualified to receive the depreciation deduction that I am going to share in this video. I am a real estate professional, so this number do apply in my case. Your situation and qualification can be different. To be qualified as a real estate professional, you have to work at least 750 hours in the real estate investment, which can be residential and or commercial real estate activities. Let's first take a look at how much taxes you have to pay on the 100,000 income from a job or on something many people call a W-2 income. This is probably more familiar to most of you compared to the tax implication on the real estate investment. But let's review W-2 income first before we compare it with income from real estate investment coming from your cash flow rental properties. Let's get into them in detail now. When you earn an annual income of 100,000, then you are in the tax rate at 22%. You can see the tax bracket breakdown from the picture here from the smartasset.com. So if you earn 100,000, you will pay about 22,000 in federal income taxes. Of course, you are able to apply deductions like mortgage interest paid on your primary home, TRICARE credit, and other things to this 22,000 number. For simplicity reasons, I will exclude these deductions and credits from both cases. Now, don't forget state income tax unless you live in Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. You need to pay state income tax in addition to this federal income tax. If you like this video, then support to smash the like button because I would like to have at least 100 likes. I appreciate your support. Thank you. Let's look in details of how much federal income tax you will pay when you earn 100,000 from your real estate investment. More specifically, 100,000 of cash flow income from your rental properties. As an example, let's assume you have a real estate portfolio worth about $2 million and it's bring in the annual cash flow income about 100,000 when you own real estate investments. The IRS give you tax incentive called depreciation. Residential properties can depreciate the structure of your rentals over a period of 27.5 years. So if you have a $2 million worth of rental properties and 20% of the property value is in the land, your land cost is about 400,000 and the rest of 1.6 million is the structures. You cannot deduct the land value, but you can deduct the structure value. Now, if you can depreciate that 1.6 million over the period of 27.5 years, that is 58,000 per year. Your taxable income now is 100,000 minus the depreciation of 58,000 and a little bit more. You would have left of 41,000 in taxable income. With a taxable income of 41,000, you are at the lower 12% tax bracket. At the 12% federal tax rate, your tax now is about $5,018. Now you understand the tax advantage of owning cash flow rental properties and how the cash flow income here is compared with income from a job. You can actually lower your tax brackets as you build wealth progressively. You will enjoy this depreciation 27.5 years. When you finally decide to sell the property, there are other tactics that you can deploy in order to continue to defer your capital gain tax, like the 1031 exchange. Here, you can see the difference. You legally save nearly $17,000 per year. You know, I am a big believer in the compound effect. Even assuming that you have only $12,000 per year in tax saving and you continue to invest all those savings for 20 years and earning the interest rate at 8% annually. Using a free compound calculator at thebankrate.com, this will add up at the end of 20 years. You will end up with $649,000. The key takeaway from this video is that active income, such as those W-2 jobs, may make you look and feel rich, but you will pay higher taxes. On the other hand, when you earn cash flow real estate investment, you can not only produce great monthly cash flow, but it can also lower your overall taxes. The saving from your other tax payment can be reinvested in other income-produced investment assets. So you can continue to compound your money years after years. In turn, you may reach your financial independence years sooner. Let me know in the comment below, what tax strategy do you use to lower your income taxes? Do you own a business? Thank you so much for watching. Let's learn, invest, and make an impact. Ciao!